Check out shares of Intel falling more than 11% today after the company's disappointing earnings report. But does this bode poorly for the rest of the chip sector? Let's get a Carter Worth of Worth Charting to break this down. Hey, Carter.
Hi there. Well, I mean, it can be examined a couple of ways, but before we look at the charts, the real truth is that Intel's weakness, I think, is idiosyncratic. Semis are not all that exciting as a theme, as an area of the market, but what's going on in Intel is truly specific to it. Let's look at a few charts. The first, this is a two-panel chart, and what it depicts is Intel on the top, going back to the mid-1990s, and its relative performance to the SOX index on the bottom. And what you see, and there's no way around this, is that Intel has been underperforming since the peak in '99 fairly consistently. We also know this, that Intel right now, its all-time high was $75.60 back some 20 years ago, and it's trading at almost half that. There's something wrong with this particular chip maker, whereas that's not the case with semis as a theme. Take a look at the next two-panel chart. So this is same setup, something on the top versus something on the bottom. In this case, the something on the top is the SOX index, right? The broad measure of semiconductor and chip companies. And look at the relative performance to the S&P on the bottom. Since 2008, and that's important, semis bottomed in '08 relative to the S&P. The S&P made new lows in '09, as we know. Semis have been outperforming. And the amazing thing here is they still haven't even recouped their performance since the dot-com peak. And just to look at semis overall final chart, this is simply the SOX as we know it. I would call that a sort of benignly bullish. It's an uptrend, not a particularly robust one, but it has responded to its 150-day moving average repeatedly. And on the week, semis were better than the S&P. Semis were better than the QQQ. Semis were better than the Russell 2000, and that's with Intel being down so badly.
Carter, thank you. We'll see you in a few minutes on OA. Carter Braxton Worth of Worth Charting. The charts look pretty grim as outlined by Carter, Victoria, but you think this is a long-term opportunity. Why?
Yeah, we really do. I mean, Intel's not our only exposure in this space. I mean, we do have allocations to Broadcom, NVIDIA, Texas Instruments. So it's not that we're all in on Intel for this space, but we do think there's some opportunity here. When we look at what Pat Gelsinger has laid out, his plan going forward, we know everything has to kind of go right for this to be positive for the stock, but we think we need to give him a little bit of time to make this happen. We think some of the disappointing news from the earnings and what we've seen over the last couple of quarters is already priced into the stock. And when we look at our models for our large cap core strategy, we have the qualitative, like the fundamental components of it, and we have a values-based component. And when we take the Russell 1000, Intel actually is in the top 10% from both of those sides of our model, the qualitative and the values-based. So it makes sense to add it at a small component into our portfolio. And this is why we think longer term, if the CEO can turn things around and do what he thinks he can do, it's a positive for your holdings. And we think the risk reward is enough to go ahead and take that chance.
There are a lot of ifs in that bull case, Victoria, even for a small portion in your portfolio. So, Nadine, how would you weigh the opportunity cost of devoting money to Intel over maybe some other semiconductor stocks at this point, which Carter has said look better?
Well, Mel, what I just learned is that Victoria is much more patient than I am. So management at Intel is executing a turnaround that's going to take, I think, a lot longer than anybody thought. And they're probably losing some share to competitors in the process. So I don't like those kind of trends. I think you're spot on. You can find value elsewhere. We like a Japanese company called Tokyo Electron. They obviously don't compete directly with Intel, but they're in better spaces. They just held a day on October 12th for investors, and they're steadily becoming a leading global company. They covered areas across their tech, environmental initiatives, a bunch of ESG initiatives, and they're targeting with all their ESG costs, margins about 30%. And so I like that type of business where you're seeing growth, you're seeing improvements. I can get it now. I don't have to be patient like Victoria is. So I just prefer to go elsewhere. But I hear her that there's probably value along the way. I'm just not as patient.
Grasso, your quick take.
Yeah, so the quick take is in Intel can be shocking and exciting too. It ran from December to about April. It ran 51%. Not to say that it's going to do it again, but I would play the favorites. I would play the NVIDIAs. I would play the AMDs, both of which the charts are looking double toppy. But if they break this level right here, they both break out.